in the car.
Folks, we are waiting for a few more participants to join. We'll get started in a few minutes. Get started in another 2 minutes. One more minute and then we'll start. Okay, so let's begin. Welcome to your webinar on the candlestick patterns and how to automate them using Python. My name is Deepak and I'm going to be covering this webinar today. So just quick confirmation, can someone write on the chat if you can hear me loud and clear? Thank you for the confirmation. So let's go ahead and start. So what are we expecting to do today? The agenda is to understand what is a candlestick pattern and how do we read a candlestick chart, why they are useful, and basically the interpretation of the information behind it. Then while observing these candlestick charts, what are the kind of patterns that develop and how to make use of those patterns in order to take a trading decision. So we'll be looking at a couple of patterns like bullish patterns, patterns that tells you that the market is going to go in the positive direction or in an upward direction. Then you see some bearish patterns, which means that if these patterns are observed on the chart, there is a likelihood or a chance that the market might fall. And then there are some continuation patterns. Continuation patterns are confirmation that whatever trend the market is in, and if these patterns are observed, these patterns will continue. I mean, the trend will continue. So if the market is bullish, the market is trending upwards, and you see a continuation pattern of candles, that means the market will continue to be bullish, right? The same way, if the market is bearish, and if you see a continuation pattern, it means the market will continue to be bearish. So ideally, we divide all the candle patterns into three categories, right? Either it's a bullish pattern, a bearish pattern, or a continuation pattern. There are many other categories in which they are divided in, like indecision, reversal, but we are not going to talk a lot about them. We are just going to look at the basics and how we can automate these pattern recognition through Python in order to take a trading decision. Okay, so in our previous webinar, I have covered about algo trading, that how you can build algorithms and automate your trade. Now, this is a part of that series where it is also a system-based trade that we are trying to identify. But now we are trying to find some patterns in the historical data and then take a decision based on it. So let's go ahead and first understand what is a candlestick. How does it look like? What are the components of a candlestick chart? Right, so that we get a fair idea of the patterns that we will cover later. So what are candles? You will see when you visualize any asset, there are two types of candles formed. It will either be colored green or it will be colored red. A green color candle means the market is moving in an upward direction, right? In short, it's a bullish candle. If you see the color of the candle is red, it means it's a bearish candle or the market is moving on the downside. And these candlesticks were first used by Japanese traders in commodities in the late 1800s. So this is not a new technique. This is probably more than 150 years old technique that we are understanding, but still relevant and is being used by almost everyone around the world who's doing trading in any kind of asset, be it equity, be it commodities, be it forex, or be it crypto. So these candlesticks are popularly known as Japanese candlesticks because it was developed in Japan and it was first used by rice traders, farmers and merchants who were dealing in rice trading, just to identify if the price of the rice is rising or it is falling. Now, each of these two candles that you see, apart from the color, everything else is the same. Like you have a big body of the candle right at the center. And then you have some spikes, which are also called as wicks, or you can also call them as shadows. So a candle is made up of a body and a shadow. You know about data analytics and a visual technique. It somewhat resembles to a box plot, but the interpretation is very different. So here you can see there are 4 things associated to a candle that in a given duration of time. So it depends on the trader on which time frame they are visualizing the chart. Are they visualizing on a 5-minute time frame, 10 minutes, 15 minutes, 30 minutes, 1 hour? So they can visualize the charts on any time duration. And each candle represents the movement of the prices within that duration. And it exactly points toward 4 values, which is the opening price in the time, the closing price of the asset in that time period, what was the highest point and what was the lowest point. This is popularly known as OHLC. O is open, H is high, L is low, C is close. So this is referred to as OHLC candles as well. So in a green candle, when the market is moving up, the low and the high are represented by the wicks, and the open and close is represented by the body. The closing price is greater than the opening price. That is where we are saying the price has increased when the price is closing above the opening price. So you will see a green candle there. And alternatively, you will see a red candle when the closing price is below the opening price. These candlestick formations allows you to find setups, determine the market condition, and identify the most optimum entry and exit points that could help you execute profitable returns consistently in your trades. Now, these candlesticks that you see, like the wicks, the body, they can vary in size. There could be some candles where the body is very small, but the wicks are very high. There could be some candles where the body is very high, but the wicks are very low. So the formation of these kind of candles in different sizes, different ratio of the body to the shadows, they create some patterns, and these patterns can be very useful in identifying the market trends, giving you the most relevant entry and exit points so that you can be more profitable if you follow these. And candlesticks becomes more powerful when you combine them with price action techniques. Price action techniques are where you look at the chart patterns also, right? So combination of candles, how they are forming some patterns. Right now we are just following a single candle and what is the kind of body and a shadow it has. And based on that, we will try to decide if the market is going to go up or down. But if I'm looking at, let's say 15, 20 candles in continuation, and what is the pattern identified by those 15, 20 as a whole, that becomes price action. How the price is moving over multiple candles. So if you combine these two, then you will get the most optimum entry and exit points in the market, where there is most likely you will make a profit rather than a loss. So if we want to see these candles in action, let's go to a charting platform, or let's go and look at a chart to see how these candles looks like, some of the examples of these candles. Okay, so I'm going to open Trading View, which is one of the platform where you can visualize charts. So this is a chart for Bank Nifty, where you can see that there are some candles that are colored green, there are some candles that are colored red. And all these candles currently are on a duration of 1 hour. That means each candle represents 1 hour of price movement. And you have many other durations in which you can visualize them, starting from 1 minute, going up to 12 months as well. So you can look at 12 months price movement in just a single candle. So it depends on what kind of trader you are. If you are an intraday trader, like you'd like to take a trade and close it the same day, then you will be looking at a smaller time frame. But if you are a trader who like to hold your positions for the coming future, then you can look at a longer duration time frames as well. And for candlestick patterns that we are trying to find, they are more powerful. They are more accurate when you look at them on a higher time frames, preferably 1 hour and above. Because on a shorter time frames, the market movement is so quick, the candles are not able to capture all the relevant information in these formations. So whenever you look at a candle pattern, you generally prefer to look at them on a higher time frame, 1 hour and above, right? So based on these candles that you see here, there are some greens and reds. Let me zoom this further. So you can see there are some candles with a very small shadow. There are some candles with a very long shadow with no body. There are some candles where you see only the body, almost zero shadow. So these are all nothing but patterns that we are trying to find. Each of these patterns signifies something. Each of these patterns tells you something about the market. So let's go ahead and see some of the popular patterns that can be observed on these candles, and how do we decide, should we buy or should we sell based on those patterns. So let's go back and see the type of patterns that are possible. So the first kind of pattern that you can find on a candle chart is known as Doji. And this is one of the most frequent patterns that you will find. Doji is a candlestick pattern that forms almost about more than 50% of the times when you see any chart. And there are many variations to Doji. Right? Most of the reversal patterns, reversal means when the market is going in a particular direction and you see these Doji patterns, the market tends to go in the opposite direction. It reverses its direction. So that's called reversal. There are many patterns, especially the reversal patterns, that are built on top of Doji. So you can say Doji is a common platform over which there are many other patterns are also recognized. Doji itself is considered to be an indecision. Indecision means the market is not very clear. Is it going to go up or is it going to go down? So whenever you see a Doji, which is this first picture here, whenever you see this Doji pattern, it means there is a certainty of indecision. The bulls and the bears are fighting it out. But the market trend is not clear. It can go in either way. It can go in upside direction. It can go in a downside direction after Doji. It's an indecision. There's not a clear pattern there. But whenever a Doji is formed, we have to apply certain other rules in order to identify the direction of the market. So Doji can be considered both as a bullish or a bearish pattern, right? As I said, it's an indecision. It can go either side, where the opening price of the candle is almost equal to the closing price, right? So if you look at the first picture, the shadows are pretty big. That means the market is making a high, it is making a low. But the open price is almost about equal to the closing price. So there is no real body to this candle. When the opening price is equal to the closing price, that tells you about indecision, where the bulls or the bears, neither of them are in control. And that is where we look at some variations of Doji in order to find a market trend. like a gravestone doji or a dragonfly. A gravestone doji is where you will only see a high, but the opening price, the closing price, and the low are all almost about same. It's like a gravestone. And a dragonfly is the opposite. So a gravestone doji is usually found at a top reversal. That means you'll find this when the market is rising. A gravestone doji will form and the market will start to reverse. And dragonfly is the opposite. The market is going down. You find a dragonfly doji, the market will start to go up from there. It is a reversal. But if you find a doji, that's kind of indecision, right? Not really clear. So let's go ahead and spot these kind of doji candles on our chart and see if we are able to see some movement after that. So if I go back to the trading view, right? So you can see here, there are a couple of patterns that seems like doji, like this one you have right here. Let me highlight this. This candle right here, this red one. Looks like a gravestone, but there is a smaller wick on the low. A perfect gravestone will not have any low, where the opening, the closing, and the low price will be all same. Here we can see a little bit of low. So it's not a perfect gravestone, but it looks like a gravestone doji. This looks like a dragonfly. Let's go up and see if we are able to spot a few more. See, here you can see there is kind of a dragonfly. This is kind of a gravestone. This is a perfect doji where the highs and the lows are almost same and the opening is equal to the closing price. So there's no real body to that candle. So this is a perfect doji. So you can see how frequently these doji patterns appear on the chart. So you can find these dojis visually by just looking at the chart like I have done right now, or later in the day, we will also try to find these patterns automatically through Python, right? We will see how Python programming can be useful to find these patterns. So what happens when a doji is formed? Whenever a doji is formed, the psychology says that it's a tug of war between the bulls and the bears in which neither party was dominant, right? Because the opening price is equal to or almost similar to the closing price. So there's no real decision if the market is going to go up or down. So neither of them is dominant at that point in time. Price may have been driven up or down from the open, but was driven back to the closing to the opening price, right? So you see a high and you see a low. So the price went up, it went down, but it closed almost similar to the opening price. This indecision in the market often precedes a change in trend or a sideways movement or a reverse movement. So this is an indecision where the market can go in any direction after a doji. And that is where we look for either a gravestone or a dragonfly. Normally, it is said that what is a confirmation of trade? You get a confirmation when the price trades above the doji or below the doji. That is the kind of direction the market is likely to go. So whenever you see a doji pattern, a perfect doji, not a dragonfly or a gravestone, whenever you see a perfect doji, the market is likely to go in the direction in which it breaks the high or the low. So if you look at one of those perfect dojis, we identified one perfect doji here. So you can see the next candle exceeded the high, it broke the high, and the market continued in that direction. Whenever you are spotting a doji, a perfect doji, right? So you can see here, this looks like a perfect doji. The next candle broke the low of this and it went down slightly, or it was mostly sideways. There was another kind of a doji here, and it break the high and it went up. So you look for a confirmation. You look for whether the trend or the indecision was broken, and you take a trade in that same direction. While a gravestone and a dragonfly is pretty clear, that is where you take a reversal. So if the market is going down, 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 and you see a gravestone, from the gravestone doji, it will start to go up. And the same for dragonfly. If the market is going up, you see a dragonfly, the market will start to go down from there. So you take a sell position. So doji is one of the most common patterns you will find on candlesticks. And the two variations to it is a gravestone or a dragonfly, which signifies a reversal, while doji is an indecision. So you decide which direction the other candles are breaking in. If they're breaking the highs, you go buy. If they're breaking the lows, you go sell. That's one pattern, which is the most common. Now, if you look at some other patterns like a shooting star, which is another form of doji now. But this pattern, shooting star, is you can say a more confirmative because it has some body to it. So you can see that it looks like a gravestone, but with a slightly bigger body. A gravestone did not have a body. It had the same pattern, but a gravestone do not have a body, but this shooting star has a body. So you can say it's a form of a gravestone doji with a body to it. And there is a rule to say it's a shooting star that the upper shadow has to be at least 2 times the size of the body. So this shadow that you see here, the wick, it has to be twice as big as the body. Only then you will be able to call it a shooting star. And it can be of any color. It can be red, it can be green. So the color doesn't matter as long as the wick is 2 times bigger than the body of the candle. And it is a reversal pattern. And it is a bearish reversal pattern. That means you will always find this in a upside moving market. So the market is moving up, up, up. You find a shooting star. From there, the market will start to reverse most likely. Psychology says the bulls continue the uptrend by gapping up the price, driving it to new highs. So the price is continuing to rise, making new highs. The bears come in force through and drive back down, price down. A red shooting star is more bearish than a green shooting star due to the bear's ability to force the close of the candle below the opening price. And what is the confirmation of trend? The price trades below the body of the shooting star candle. So if the price is going up, making new highs, you see a shooting star. As soon as the price is below the body of the shooting star, you can sell. That's a confirmation that it has a reversal and it will go down now. Let's go ahead and see on the chart if you are able to spot any of these shooting stars. See from the first instance here. See, this is a kind of shooting star we can say, but the wick is not long. The shadow is almost the same size as the body, but it looks like a shooting star. Because it was not a confirmation, you can see that the reversal was not formed. Shooting star is always in the rising market. So this was falling and then you saw a shooting star. So this is not going to be considered as a confirmation. Right? That is where the rules are very important. When do you spot a pattern and how do you decide to take a trade on it? So let's see if there is another shooting star pattern that we can see here. So it doesn't seem to be forming in a near future. We'll try to look at it in Python and see if there are any kind of shooting stars and just try to see them in the chart. But in the recent times, Bank Nifty did not show any kind of shooting star pattern. But to understand what is shooting star, it's a kind of gravestone doji where the shadow has to be twice as the body. A gravestone does not have a body, it just has a shadow. But a shooting star has a body associated. That means the opening and the closing price has some difference. The color of the candle can be red or green, can be either of the two. If it is a red candle, that means it is more bearish, but also signifying the reversal at the same time. And the opposite to this shooting star, like shooting star is a form of gravestone, we can say hanging man is a form of dragonfly. It's the same rules, just the opposite of shooting star. Now the body is on the upper side rather than the lower side. That also signifies the reversal. The color of the candle can either be red or green, and the shadow has to be at least 2 times the body. Right? So this should be the lower shadow. The lower shadow has to be times the body. And it has the same psychology that says the price is going up and the bears are now dominating the market. So when the price trades below the body of the hanging man candle, that is when you take a trade. So the price is making highs, highs, highs. You see a hanging man, the price will start to fall after that. And as soon as the price goes below the body of this candle, you can take a trade and on the negative side. So let's see, there is a hanging man. It looks like a hanging man where the price is going up, up, up. But it did not give us a quick confirmation. The price did not, close much below this body. It was very close to the body itself. So the price did not retrace. Not always the patterns are going to be, giving us the correct indications. So it's just a pattern, and we need to make sure we are trading with a strict money management, stop loss and all. So this is kind of another hanging man, but it is in a downtrend. So this will not be considered as a hanging man. Hanging man is only in an uptrend. Like this was going up, up, up. If there was a hangman here, the price would have gone down. Right. So Doji is one of the most common patterns. And then after Doji, you can see variations like a shooting star or a hangman. Now, after this hangman, there are 2 very strong patterns that you can identify on the charts, which are called as hammers. Hammer is the opposite of the hanging man. This is also look like a hanging man, right? So hanging man was when the price was going up, it is a reversal for the price to go down. But hanging man, a hammer is the opposite. When the price is going down, you see a hammer, that is a reversal for the upside move. All the other rules remains the same. So it depends from which trend these patterns are formed in. If it is formed in a bullish pattern, the market is likely to go bearish from there. If it is forming in a bearish pattern, it is likely to go bullish from there. But as I was saying, there are 2 patterns that are very, very strong, and you see a very good movement after these patterns. These are called engulfing patterns. It's like one candle eating the other. So if a green candle eats the red candle, right, the size of the green candle is bigger than the red. That's an indication that the market will move in the forward direction, because there is a very strong bullish movement that we have seen after a bearish movement. So bullish engulfing is always an indication that the market is slightly going to go up. So as soon as the price breaks the high of the candle, you can enter into the trade, right? So the psychology says the price trades above the body of the green candle, you can go into a bullish trend. And the opposite to that is a bearish engulfing, where the red candle completely eats the green candle, or the body of the red candle is completely bigger than the green candle. That's a bearish reversal. So the market was going upside and then it starts to fall after a bearish engulfing. So these are some basic patterns that we generally identify on a chart. I have just shown the most common patterns of dojis, the different variations of doji, and then two strong patterns, which is the engulfing pattern, either bullish or bearish, where one color is completely shadowing the other color. So if there is a green candle completely shadowing the red, that's a bullish engulfing and the market is likely to move upside. If there is a red candle that completely engulfs the green, then it is a bearish and movement and the market is likely to go downside from there. It might not be like an immediate down, but yes, the market trend will change and it will fall in the upcoming candles. This was some basic idea about the candles and the different kind of patterns that you can observe. Now let's go to Python and see how we can automate this. What is the library that we can use in order to find these patterns? Okay. So what I've done is created a program here, which will help you identify based on the patterns, right? So there are about 60 odd candlestick patterns that are identified. So I have a list of all those 60 patterns. If I go ahead and show you those patterns, let me show you the patterns here. So you can see here, these are all the patterns that I'm going to identify today. Right from, let's say, 2 crows, 3 black crows, and this is a doji that we've seen, dragonfly doji, engulfing, like the bearish and the bullish engulfing, gravestone doji, hammer, hanging man. These are some of the patterns that we discussed. But there are many other patterns that are also available. So I'm going to identify in India's stock market, specifically in the National Stock Exchange, NSE's Nifty. I'll be looking at the top 750 companies. Not just one or two, the top 750 companies based on their market capital. And we will try to identify that is any of those companies charts or the price movements showing these patterns. We will try to do in both ways. We will select a pattern and then see which of those 750 companies are showing this pattern. And we will also see if we select a company, what all candlestick patterns that company's price movement is showing. So we will do both ways. From the pattern, we will try to identify which company's price movement or which shares price movement is showing that pattern. And if we select any company or the shares, then which kind of candlestick patterns they are forming. Right? We'll try to do it both ways. So this is the list of all the candlestick patterns that we are trying to identify today. And this is the list of all the companies in which we are going to identify them. Starting from the indexes. So we are looking at 6 indexes, including Nifty 50, Bank Nifty, Nifty Midcap, BankX, Nifty Fin, and Sensex. And then there are almost about 750 companies. Based on their market capital, I have selected these companies where we will be trying to identify the market trend. So this is the Python program. Let's go ahead and look at what we have used here to identify these patterns. Okay, so it's a simple Flask application. A Flask application is where through Python programming you can create a UI, a user interface. So the analysis that we are going to do is based on a user interface. It will not be in the console or in the terminal of Python. For that, we are going to use Flask, which is a Python library through which we will try to automate this. Right, let me zoom this. We are using Yahoo Finance as a library in Python to fetch our data. So the data for those 750 companies that I showed, I am going to fetch the prices for those 750 companies through this Python library, Yahoo Finance. For all these candlestick patterns, right, the patterns that I displayed, 60 odd patterns, we are going to find those patterns using this library called Talib. Talib is a library which you can use in order to identify technical analysis or to do technical analysis on any price data. It could be a price of commodity, equity, or anything, right? So if you have an open, high, low, close, like a candle data, you should be able to do a technical analysis using this library. And this is what we are going to use to find those patterns. Okay. Now in the user interface that I'm creating three URLs, right? Like you navigate a website, you see when we click on something, the URL changes, right? So in the user interface, it's kind of a HTML page that I'm creating. So which we are going to look at on a browser. And there are going to be three URLs to it. One URL is going to be with company, where we will select a company and we will get to know what all candlestick patterns are available in that company's price. So as soon as we select any company, we are going to download the data from Yahoo Finance, starting from the 1st of January 2023 till date. So it will fetch the data till the latest date. And we are going to identify those patterns in that company through Talib using the open, high, low, and closing price. The candle data basically, right? So the candle has open, high, low, close, OHLC. So once the data is downloaded, for every day, we will have an opening, high, low, and close, which we are going to use and find if there is any kind of candle pattern through this Talib library. And if the patterns are identified, we are going to just say, what is the kind of sentiment we have about that stock? Do we have a bullish pattern? Do we have a bearish pattern? And we are going to simply count how many patterns are available and display them. Right? So the flow is, we are going to first select a company from that list of 750 companies. Whatever is my selection, we are going to download the data from Yahoo Finance for that company starting from the 1st of January 2023. Once the data is downloaded, which is your open, high, low, and close, we will use the Talib library to identify if there is any candle pattern out of those 60 patterns. For whatever the patterns identified, we will look at how many of those patterns are bullish, how many of them are bearish, and finally display them so that we can understand, should we look at a bullish movement in that particular company's prices or should we look at a bearish movement. This is when we go to the URL with company. But if we go to the URL that says pattern, it is the opposite. Now we are saying download the data for all the companies. I'm not selecting a company, so I'm going to download the data for all the companies, no matter what. And then I will loop. I will loop means one by one, I will iterate through each one of them and see if any of those companies are forming any pattern, the pattern that I select. And if it is forming, it will just list down all the company names. So we'll get to the code a little later. Let's look at the application first so that we can relate to the code. So I'm just going to initiate this application in my virtual environment. I say Flask debug run. So this will start this Flask application on this URL. So you can see there is a URL now given and this application is running. So I'll just simply copy this URL and open it on the browser. So you can see it has started what I have coded in Python. And I have added a couple of other widgets again from the TradingView platform in order to make it look good. And this was in the HTML that I've added. So this is a stock screener. You can see the URL by default goes to company, right? So the URL is at the company where I have a list of those 750 companies that I showed you. I can select any of these companies and click on scan. As soon as I do a scan, it will give me an information like this. What kind of pattern is formed in that particular stock? So Nifty is the default selection. And the data currently is as of the 19th of April. So as of 19th April, Nifty was forming an engulfing pattern, which was a bearish engulfing. There was only one pattern forming in Nifty on the 19th of April, which was a bearish engulfing pattern. Let's go ahead and confirm. So if I go to TradingView, open a chart for Nifty 50, look at a daily time frame. This is the candle of 18th. So when you say the data is of 19th, that means it is showing the data till the previous day. So on the 19th means that this was the 18th of April, which is being shown by the application. And you can see here, the red candle has completely shadowed the green candle. So it's an engulfing pattern like we've seen in the presentation. I explained about engulfing. And we understood whenever there is an engulfing pattern, the market is likely to go down. So after this engulfing, we see that the low has been broken. So there is a likelihood or a chance that the market will continue in a downtrend for a few more days. There could be some upside movement, there could be some downside movements, but ultimately in a couple of days coming, it might be bearish. You can select any company of your choice and see if there is any kind of pattern forming. So write down on chat which company's patterns you want to see. Do you have any company in mind where you want to see if there is any kind of pattern forming? Bajaj Finance. Okay, let's go ahead and look at Bajaj. So this is, sorry. So this is Bajaj Finance, scan it. So in Bajaj Finance, there was no pattern forming. But let's do one thing. Let's get the data till the latest date, right? So the data is of 19th. Let's get the data as of today, which is 21st of April. So I have created another URL, which is called a snapshot. So what this URL is going to do for those 750 companies in the list, it will download the data for all of them and store it in the form of CSV files, right? So see what happens once I execute this, once I hit enter on the snapshot. If we go to the code, you can see here, it is downloading the data for all the 750 companies, right? So on the console, you can see that it is downloading all the data and it is storing all that data here. You can see that a CSV file is created for all of those companies' prices, starting from the 1st of January 2013. So that the date is customizable. You can customize the date as per your requirement. But because candlestick formation, we are just looking at the last candle. So the historical data is not really useful here. But still, we are downloading the data for all those 750 companies. Once I set snapshot, it is going to update the data for me. So I don't really have to do anything manually. I just have to execute that URL. Once this is finished, this page will give me a confirmation that the data has been downloaded. And then we can go ahead and look at the patterns again. Right? So I'll wait for this to complete. It is going to take about a minute or so. In the meanwhile, if there are any questions, please feel free to put that on a chat window. So it has done downloading all the data. We can see there is a confirmation here. It says success. That means the data has been downloaded successfully for all the 750 companies. Now let's go ahead and look at the company URL again and then screen Bajaj Finance once more. No. So Bajaj Finance is not showing any kind of pattern as of now. Let's go ahead and look at some other companies. Let's say State Bank of India. So State Bank of India is showing a bearish pattern, which is again an engulfing pattern. Right on this page, I have some additional information which shows about the upcoming earnings and market capital and everything. You can see the profile, and at the bottom, I have built in a very useful thing which gives us an indication of all the technical analysis you can do. So on the left, you see the fundamental analysis like the balance sheet and everything, all the details of that particular company's books. And on the right, you have the technical analysis that on various time frames, how the outlook of the market looks like for that company. So in a 15-minute duration, like if I'm doing a short-term trading, intraday trading, the stock price is kind of neutral. So it's going to be remaining sideways. If we take a look at a daily price, the market is neutral. So State Bank of India is right now in a sideways movement. It's not going up, it's not going down. You can look at any time frame, and this is available for everything, right? So right from those 750 companies, you can find any of them and you will be able to find the patterns, right? So let's look at Yes Bank. Yes Bank is also forming some pattern called Hikaki pattern, which is a bearish pattern. In a longer duration, it is selling. So the pattern that is forming bearish on a daily time frame, technical analysis is also confirming the same, that yes, the stock is under pressure and might go down. So this is a basic application that was developed only to understand the patterns and which companies are forming what pattern and all. So this is where we saw that selection of company and which patterns are available for that company. If you want to do the opposite, I can go to the URL of pattern. And now this is giving me an option which pattern I want to select. Let's say I want to see a Doji. So I select Doji, scan, and it gives me a list of all the companies that are forming a Doji. So these, out of those 750 companies, these are all the companies which are forming a Doji, and you can see the bearish or the bullish movement of those Dojis. So there are some Doji which are bullish. Right now, it looks like all the Dojis that are formed are bullish Dojis. So let's take a look at any of these Dojis. So let's look at a popular one. Which company should we look at? Let's look at IRCTC, for example. Okay. So I go to IRCTC. See, this is a Doji forming. As of the last date, this is a Doji forming. It's a green color, so it's kind of a bullish Doji. That means the market might slightly go upside down from here. Doji formed in a falling market, indicating a reversal that the market might go up. Again, if you see something else, let's take something else. Let's take L&T. So if I do L&T, see, this is a Doji again forming in a falling market, indicating that the market might go up. So the patterns might not look perfect, but there are some mathematical rules behind them based on which these patterns are identified in Python based on the open, low, high, and close. If the mathematical rules are satisfied, then it will identify that as a pattern, right? So visually, it might not look like a perfect pattern, but yes, this is a doji confirmed based on the rules, and the market is likely going to go up, right? Similarly, you can find any of those 60 patterns here. Let's look at engulfing patterns. That which of them are showing bullish engulfing, which of them are showing bearish engulfing. So this one here, Nifty Financial Service, it is showing a bullish engulfing. So if I go ahead and look at Nifty Financial Service, this is a bullish engulfing. The green candle is completely shadowing the red candle, indicating that the price probably is going to go up from here. Likewise, Python programming can be used in order to identify any kind of pattern, or in any company's price of your choice, you can identify if there is any pattern. So you can do it both ways. From the pattern, you can identify the stock, or from the stock, you can identify the patterns here. We're doing it both ways. And I've created a user-friendly a UI where we can look at something outside the Python environment and understand it more easily. So there is an HTML file behind this, wherein a lot of HTML code has been written in order to see all those things in a user-friendly way. So let me take some questions. I guess there are a few questions there. Are you also doing automatic buy and sell in this app when the pattern is identified? No. So as of now, this app is only developed to identify patterns. But yes, you can also trade on the basis of it. So once you identify a pattern, it is just a matter of putting in a buy or a sell order, right? So if I know that there is a bearish pattern, then I'll probably sell. If there is a bullish pattern, I'll probably buy. So I need to select the stock and then connect it to a broker through an API and place that trade. So that can be done. That can be automated over this. Do we also have a plot of bearish bullish sentiment at intervals and comparison with actual movement? No, not yet, Rafat. So that can again be implemented, but we have not developed that yet in this application. This was just to show the application of how candlesticks work, how you can use Python to identify these patterns. Any specific requirement can be coded on top of this. Any further questions that we have here? Live data, Yahoo Finance is enough. For live data, see, Yahoo Finance is going to give you data at least a 1 minute interval. So it will give you data every minute. But the price movement is so fast, especially if you're doing a trading on futures and options, the price movement is very high within a minute. In a minute, the price can go like 100 points up, 100 points down. So Yahoo Finance is not enough. In most cases, in equity, it will be enough. But if you're dealing in futures and options, then no. You need data directly from your broker. Also, the Yahoo Finance, the what do you say? The latency is slightly high. So even though it gives you a minute data, but it doesn't return that data every minute. So maybe you'll have to wait for a 2 minute or 3 minute duration before you get that data. So ultimately, it will cause a lot of delay and you will not be able to optimize your solution through Yahoo Finance. Yahoo Finance is a good tool to do back testing. That if you're developing a strategy, you need data, you can fetch it through Yahoo Finance and see how it worked on your historical data. But to do live trading, it has to be the data from the broker, which is a tick level data. So within a second, you get 4 or 5 price movements. So that's the speed of the data that you'll get. So this is all the kind of things that we are going to cover in our course that we are going to launch in the first week of May, right? I've reached out to most of you already, but if you still don't know, we are coming up with an algo course wherein we're going to teach all of these things. Our primary focus is mostly going to be on derivatives, futures, and options. But yes, anything that we will discuss can be applied to any other asset class too. You can apply that to equity, you can apply that to forex, commodities, or cryptocurrencies as well, right? So we'll be learning everything right from the scratch. What is the asset definition, the terminologies, all the technical analysis that you can do, like the candlestick patterns that we try to identify today, price action movements, chart patterns, indicators, and all. We'll also be learning TradingView, the platform that we saw for charting, and we'll be developing a lot of algo strategies based on whatever we learn and deploy them live in our account. Okay. So the enrollments are going to be closing tonight. So if you are interested, feel free to message on the group or send me a message and I'll get back to you. For those who I have already contacted, I'll follow up by evening, and we will start the first class from the 4th of May, right? So registrations are closing today. If you have not registered yet, do it by the end of the day. So I do not see any other questions. So before we close, any questions that you guys have, let me know. All right, then it was good to bring you a quick overview of how Candle works. We'll be back with another webinar soon on some other topic. So stay tuned and look for notifications on the group. Thank you so much. Have a good day. Take care. Bye-bye.